Yo, what's up, Choyos? What's going on in the hood? How's everybody doing? Bear with me for a second. I'm in my mom's house. I'm in my childhood bedroom. I'm in my childhood bedroom. So give me 1 second while I get some of this stuff going. Everybody good? All right, all right. That's it. Good. Hold on, let me get this damn YouTube's up. Good. Who do we got in here? Who do we got in here? Oh, good. It's good to see everybody. Hey, Shrans, what's going on? How you doing? Oh, Susanna, won't you cry for me? Jordan, what's going on, homie? How are you, brother? It's good to see everybody. Hey, bear with me 1 second, man. I've used this, so I got this geek desk here, and this thing, I bought this thing like 2003, so it took me a second to set this up. I'm at my mom's house. Mr. Nace, how are you doing? You good God-fearing Christian man. I love you. All right, all right. I think we got everybody in. All right, cool. Let me see how we share. I'm using this new application here. Let me share this damn screen. Got it. Hold on here. We good? All right. Tell me if you guys can see the screen, and we shall. We're gonna shred. There's no getting around that. We are going to shred in ways that we've never shredded before. Hey, thank you, thank you, thank you. It is nice to be at home. There's no getting around that. Home is home. I have my little cousin's graduation party today. And like when you have like cousins, stuff like they always expect like you're not going to show up. So when I came today, he was really pumped. He was pumped. It's a good surprise. Now, let me tell you one thing about Michigan. I'm guessing this is the same about Colorado and some of these states. The dry weather makes your skin look very toasty. So you got to always keep putting them creams on. Now, we got a lot of work to do. Ricky, what's up, baby? We got a lot of work to do. Mr. Jason, what's up? Jason, you know I was, baby. You know I was. Fucking A. All right, let's do what we gotta do. All right? Let's do what we gotta do. We got a lot of work to do. So I want to do this today because the market's at an interesting, I think we're at an interesting conjecture point. What I mean by interesting conjecture point is that we have had an incredible run. And we are basically in a bull market. There's no getting around that. Like, we're in a bull market. There's no getting around that. Like, this is what we're in. No matter if you're talking about like the debt ceiling or this ceiling or whatever, right? Like interest rates. We have been in a bull market, and unless you were participating in it, you would have lost money if you were looking at economic news. And so we have to do deeper dives. Because one thing that is happening, we are in a bull market, but we are very extended. And so we have to do a little bit of a deeper dive into what is exactly happening. So today, what I want to do is go through a little bit of my scanning process on how I actually look at names. And then from there, we'll start to dig in and we can look at a whole host of other names in terms of like, what the fuck are we going to trade, right? Hold on 1 second here. And lower this bad boy a little bit. All right, cool. So first thing, like if you're scanning, if you're brand new and you want to think about and you want to look at like what the heck is it that you're supposed to trade, right? I recommend a top-down approach. What a top-down approach means is you are going to look at where the heat is in terms of sectors, and then you are going to slowly navigate into the individual names, the leading names of that sector. And I find that is an effective way to trade because you are going to have the wind at your back. See, a lot of times, like people will take a certain stock, right? So, like you have XYZ stock on your name, and you're like, wow, this is hot. But if you don't have sector momentum behind it, oftentimes like you may get choppy results. And so what I want to always do is take a look at sector momentum, and from there what we want to start doing is looking at the individual names that comprise that sector. After that, we want to look at earnings names. What are the stocks now that the market cycle has changed? We were in accumulation phase for, like, say, 1 year. We've come out of accumulation phase and we're in a run up phase. We're in a good old fashioned bull market. So stocks will act completely different. So you want to keep a list of hot earnings names also with you, because these are the ones that are going to be the best to swing trade, but also day trade. Does that make sense? Good. Yo, DJ, what up, baby? So let's take a look at the market indexes. So what I like to do is a 5-day sort. First thing that shows up on the 5-day sort is the T2108 indicator. So for those guys that are not using TC 2000, this will mean nothing. All right. But this is the quintessential way to measure market breadth. So the T2108 indicator is the percentage of stocks over your 40-day moving average. Why in God's name would something like that be important? Market breadth is a measure of how many stocks are actually going up in the market versus how many stocks are going down. But it's a simplistic way of looking at it, right? We don't really care. Like, if a stock goes up one cent, does it matter? If it goes up 2 cents, does it matter? No. So the T2108 is important for an indication of market breadth. But what we want to be doing is looking at things a little bit deeper. So I look at a handful of things to gauge the true health of the market. So this is a market breadth layout. And if any of you guys need this, let me know. So the first thing on here is T2107. This is the percentage of stocks that are over the 200-day moving average. Why would that be important? The 200-day moving average is a granddaddy of moving averages. It is the biggest of all moving averages. If you look at the 200-day moving average, it's your long-term trend. That's how I always look at it. So when you have a majority of stocks over the long-term trend, that's actually, I find, very bullish, right? So right now, up until a couple of days ago, we were 34% of stocks were over the 200-day moving average. So we're not even talking about short-term moving averages. We get the hot heat, like your NVIDIA, AMDs, that are like really trending hard, that are over the 9-day moving average. We're talking about the old 200-day moving average. So if a majority of stocks are still under the 200-day moving average, it's telling you that right now we don't have like a stock market. We have a basket of stocks, a handful of stocks that are really moving, and everything else is kind of standing still. But the big hairy Indian butt of all of this is that if you get a move like this, you go from 33% to now you're almost at 50% of the stocks over the 200-day moving average. What it's telling you is that market breadth in terms of the number of names participating is going up significantly, right? And that just happened in a couple of days. So that's something to be mindful of, and I think it's something that's huge. Beyond that, what we like to always track is number of breakouts versus number of breakdowns. Now, when you think about number of breakouts versus number of breakdowns, it's if you look at stocks and you're like, okay, this stock moved up like 20 cents, down 20 cents, none of that stuff matters, right? What we're always looking for is significant moves. So, like this is from more of the stock B method, which is 4% breakouts versus 4% breakdowns. So these are significant moves in the market, right? If a stock moves over 4%, that's pretty good. That's a lot better than like, yeah, we're moving up 1 penny and showing up on an advanced versus decliners. So when you see something like this, now we've got some heat. So what do you notice on Friday? This is a breath thrust. What I mean by breath thrust is you had a lot of stocks participating in the move on Friday. And then if you look at like how many breakdowns there are, breakouts versus breakdowns, you have 1,000 breakouts, 88 breakdowns. Fucking hey, man, that's pretty damn good, right, man? Hot damn, that's pretty good. So these are things that we want to be focusing on when we're looking at the individual parts of, is the market healthy versus not healthy? We have a breath thrust that's coming. And you can see even over the last couple weeks, the market has been healing, even though like maybe the SPY is not going. You see other things starting to pop up. And so we're starting to see an increase in breakouts versus breakdowns. If you just even look at like, right, how big breakouts versus breakdowns are, you're starting to see a breath thrust, which means there's more of a participation in the market. So why does more of a participation in the market even matter? Well, when you have a thin market with only like 4 or 5 stocks are running, you still have something to trade. That's great. But for a truly healthy market, you need speculation. You need speculative money coming into it. So what I always believe is, and this is old school, but like I want to see if the market is truly healthy. I want to see the QQQ, which has been trending for long periods of time, and I want to see the IWM confirming. So the IWM has been a dog, like it's been more than a dog. But the IWM is your ETF for small cap stocks. What we want to see is like this stock has been stuck in a range, right? It's been a box for a long period of time. So when we start to come out of that range, if Uncle Russ, so the Russell, if Uncle Russ is helping out, things look a lot better, because to have a true healthy market, you need speculation and you need a lot of it. So the Uncle Russ was up 3.63% on Friday. What that's actually telling you is that we finally have a little bit of sector rotation. There are going to be names that are beyond your NVIDIA, Meta, Microsoft, Apple, Netflix, so on and so forth, that are going to be coming into play. Why that's awesome is that it is nice to trade some of these large cap beta names. It is nice. Like, you know, they're liquid and they have good range. But to make like true money, boats and hose money, you want to make boats and hose money, what you need to have is speculation. You need stocks that are $10 that can go to $20. You need stocks that are $25 that can go to $30, so on and so forth. It doesn't have to necessarily be small cap stocks, but you need that speculation. You need retail traders to come back in the market, and they've been gone. And then you need this kind of speculation that says, hey, we're not going to just have hedge fund hotels where we all pile into Tesla, Google, Apple, so on and so forth, but we're going to have a market of stocks, a market of stocks. And that becomes very, very important. So let's start take a look beyond in our indexes, beyond just the T2108, which is a measure market breadth. Where is the other heat coming from? The best part about doing a top-down approach is that when you find a sector that looks hot, especially if you're using T2000 or some other software, you are very easily able to identify the stocks inside that sector that can shred. So what you see here is the ARC, right? So it's the ARC Innovation. This is up 8% last week. So why would that be important? Well, the ARC, first of all, Kathy Johnson or whatever her name is, right? She's become famous because of this period, right? This period of market run. She had like this nice, it's about 1 year and 3 months period, right? And it made her a legend. So now everybody's following this legend. She's goddamn 70 years old, right? But for some reason, that 1 year of her life made her a legend. So everybody in the world is always looking at this ETF. All right. So we look at it, right? So her ETF is populated. If you go on TC2000, hit this three-prong button, what you'll start to see is all the names inside that ETF. So what I like to do personally, I always do a 30-day sort. So what I mean by 30-day sort is I want to see like what are the stocks that are up the most in the last 30 days, right? So 1 month. So we can see Palantir, DNA, Crisp, Tesla, so on and so forth. So we already know like from those names, right? Like these are names that are tech stocks, bellwethers, but not your FANG stocks, like the secondary names. And they've been cooking. They've been cooking. So this is a good proxy for me, at least, on what is going to be speculative in the market. So we look at like this overall chart and look, trend lines and all this stuff. Guys, for those of you guys that are trend line guys, right? And you look at that, trend lines really mean nothing. It's just a way for us that sell products we draw lines and it makes us seem smart. But in the end, an imaginary line means nothing, right? But what we have to look at is like zones of influence, zones of love. Where are true supply and demand levels coming from? So like something on this like ARC, we start to see it. All right, it's up 8% last week. It's down quite a bit, right? This setup itself, if you look at this current market, what has been the hottest setup in the market? Stocks that were high flyers, that were beaten down maybe 80, 90%, and are coming out of range, right? This has been single-handedly the most powerful setup in the market. Now, this is an ETF, so on an individual stock basis, they've been based on earnings, but the earnings have always been shit, but because the stocks are so low, they've been popping up. So this individual setup is starting to come out. So don't worry about drawing trend lines. If you're a brand new trader and you're like sitting there like, well, how do I buy? I mean, look, that makes me look like a genius, right? Like this makes me look like a genius. This makes me look like a genius. You can draw trend lines forever. What I want to actually look at is like, all right, does it hang out and start to push over, which it already is, the 9 EMA? That's your short-term moving average, right? Does it start to hug that and start to trend its way? Does it expand its ATR? These are like super important things. Like, does the range is always when you're like in a base, the range compresses. So when your range starts to expand, all of a sudden, guess what happens? Good things happen. You start to get speculation. And we are in the business of speculation. So we want to always keep track of this thing. So me personally, I want to look at the ARC names and I want to come in on some of these things, right? So I thought this was a short. Of recent, I thought this day was a short. But what happens is like sometimes, and this is how you know it's a good stock. If you think a stock is a short because it's too overextended and it starts to grind sideways, time heals. Stocks get their power from basing. Stocks get their power from consolidation. When a stock bases and consolidates, all of the sudden, you got something special. It goes from overbought, and it was overbought, to now it's consolidating for its next run. So like something like this, it may take a couple days. You want that 9 EMA curls for the girls coming up under the kitchen. But when you get that curls for the girls coming over in the kitchen, hot damn. If you need maybe if it has one more sideways day, this 9 EMA is going to come right up under the kitchen. You're going to get yourself a nice little flag breakout. So I originally thought this could be a short, but look, ARC is coming out of range. This is going sideways. Hot damn. It may need one more day, but I think that's something we want to keep on our list. XS. So the most powerful thing in the stock market is what? Does anybody know? Earnings, right? Earnings is the most significant, powerful thing that causes stocks to run for days, weeks, and months and years. So like something like XS, it's in, first of all, it's a $15 billion company. It's not like it's some small cap stock, but it is a name that is not talked about, and that helps. If you go on, you say your Twitter, stock twits, whatever it is. Anybody talk about XS? Anybody know about XS? Is anybody even looking at XS and saying like, man, this is a heater? Like this is stock. So when you have these gaps here, this is what made Palantir hot. Earnings breakouts is the most powerful thing in the market. It is the most powerful thing in the market. Like you can't sit there and think you're drawing squiggly lines on a chart. Line, and you're like some master trader. You're going to make millions of dollars. Come on, right? You got to make millions of dollars. You go beyond, hey, I draw squiggly lines on charts. So this XS pops up on some news, right? Now you've had a month of consolidation, maybe 3 weeks. And now you're starting to get into some little goose and a gander here. The float on this is very low. It's 175 million. I know a lot of you goddamn degenerates think, low float is like 2 million shares, 1 million shares. But for regular people, right, regular companies, 170, I would say anything under 250 million shares is considered low float. So you got a level that's building out here. When you're looking at a level that's building out, what you want to be doing, look at it on different time frames, right? So if you look at here, this is a 30-minute time frame. What we can see here is like you got thrust. This is a marinate. You got thrust. Now you're marinating. You need on any time frame that you're trading 3 taps, 3 tests of a resistance to have a breakout. So you got 1, right? You got show and go. All right, cool. Now you got 2, show and go. Good. Now you need a 3. If you hit that 85, 86 zone, you got the third one, right? You got the damn third one. So now you're going to have yourself a little bit of break. Oftentimes, before they break out, you may have a rest day to let the 9 EMA catch up. You have a rest day, an inside day, and then bam. This stock has got pretty good range. It's got $3 ATR, not epic, but it's going to get the job done. Good. What else is in this ARC Nation? Path. I think this is actually a name that everybody and their uncle should be watching. Why? This is an AI stock. There's only a handful of AI stocks that are not penny stocks. All right. You've got a big breakout here. You got 1 test, 2 tests, 3 tests, 4 tests, 5th test it goes. The more times you tap a level, the more powerful the breakout's going to be. So now it broke out. Now you can't buy this breakout. Why? Well, it ran too hot into the breakout. When you think about a breakout, you have to always think about it like this. A breakout is like you are starting a race. You're starting a marathon. So if you run hot and you run a marathon into the breakout, how likely are you to win the race? You just ran a marathon into the breakout, right? So you ran a race before the race started. So like this is going to come back. But this is the type of name that we want to be watching. It may need, so this was the earnings day. You have 1, 2, 3, 4, 5 days upside. What we want to start doing is watching this area, right? Set an alert at, look, it doesn't matter, right? These are zones of love. So it don't matter how you damn draw these things. If you're a line drawer and you think like, hey man, I'm really good at drawing lines, and you gotta make like fucking shitloads of money, that's not gonna work. Line drawers don't make money. They're really great for Twitter because like you can just draw your lines and all of a sudden you're like, hey, I'm this line drawer. But that's not what really trading is about. So we have a level somewhere between the 9 EMA, somewhere between here, that we want to start watching this thing. If it pulls back under this level, it's not necessarily a fake breakout. Oftentimes stocks will retest the 9 EMA and they got really far from it. So like something like this, it may pull back. It may pull back. That's okay. If it holds, all of a sudden, we have ourselves a good God-fearing Christian setup. We're right sector, right time. You can see like normally the stock does what? 4 million shares, right? 3 million shares. You start getting to the 40 spot, 20 spots. There's accumulation going on. We want to have this name on our list. It's just not ready now. Shop. So this is one of those names because it's a cult name. Everybody in the world, everybody and their uncle is watching it. But there's no spot on this. Like if you look at this, you can draw this thing however you want, right? All of a sudden it look like you got a giant penis fetish. You would be drawing so many trend lines on this thing. But there is no spot. There's no setup that says like this is hot. It is hot in that it had an earnings breakout. It went up quite a bit, 50%, and now it's consolidating. But we don't have any levels to necessarily trade around this. We don't have a spot on this that we can say like, whoa, this is the spot, right? So it's nice, but what do you do with nice? All right? What do you do with nice? Nothing. Right? It's cool, I guess. But we've got better things to do. When the market is hot, the way it has been now, we want to be searching for setups that are ready to go now. We want to look for the ones that are DTF. They got to be DTF, right? Like, if they're not DTF right now, what's the point? So you can take something like this, put it on the weekly watch list. So I always do 2 watch lists. One is daily, like what's ready now, and what needs a little bit of work to do. So like something like this is a work to do stock. It's amazing. It looks great. You know, you got the ATR on it. You got ATR percentage on it, whatever. It's liquid, so on and so forth. But this thing has got work to do. It's not ready now. So this is how you want to like search through kind of when you're doing a deep dive into a sector, right? So like this Arc Nation. This is actually a good setup for us. Why is it? Anybody know why this is a good setup? Write this down. In a hot market, the best setup you can do is after a thrust, an inside day. What I mean is when the range expands, the next even smaller range within it is very, very bullish. So when you have something like this, it's like 60, it goes from 60 to $66, right? Now you got a day where the range is inside that particular day. And you will see this nonstop in so many of these tech stocks. You have a huge thrust. Write this down. You have a huge thrust. Then after the huge thrust, everybody wants to play it long again, right? But it just uses up too much range. So you have this narrow range day where it goes sideways, 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 right? But it's inside that previous day's range. Hot damn. The third day, that thing is usually ready to go, ready to show. So this is probably top of the list. You got a pop inside day. Not many stocks left on the bottom, right? This is a $400 stock. You're sitting here at 60 bucks. You're down 80, 90%. That's hope, right? Pop inside day, show and go. We love that. Twilio, right? Twilio, $45 stock, runs a 70. You got inside day. So see, this is a big range a day. If you get actually multiple inside days, that's actually ends up being like super, that ends up being like a little bit of fun. So I always like to look at levels on multiple time frames, right? So we don't got time for all this stuff, but what we can see is it popped up. You have a day inside, you're still holding over all its EMAs. If this holds here, like let's just say, like for example, this is the bottom of the stock. If it holds here, we've got ourselves a little bit of a box, right? And we know this market, when things go, they go. So like now you got something that, okay, if it starts to hold here, it may need a couple more days, but like you're starting to get into it. So I'd add that to the watch list. These are all different things we want to do. So let's rewind the tape a little bit on how you want to do your action. First of all, you want to go through the market indexes, right? There's a handful of things you want to do. You want to figure out what sectors are hot. Beyond that, you want to look at the big boys, right? You want to look at the big boys. I want to come up with a bullish, neutral, bearish case scenario for the indexes, right? Now, you don't have to do that as much right now. Why? Well, the QQQs have been leading the way, and nobody's even trading anything else. So what we want to do is take this QQQ and make a bullish, bearish, neutral case scenario in terms of the market indexes. So we see these market indexes, right? So we're starting to break out. We're having a little bit of flag. We are cruising up the 9 EMA. So we got a lot of good things happening. Are we overbought? Yes. We have stochastics at 85. So we're a little overbought. But overbought can get overbought for weeks to months sometimes. That's not necessarily a deal breaker. It's a confluence of things when you have something and you want to label it as parabolic, right? This is not parabolic. This is just, right, like you're coming out of a zone. So overbought is okay. So bullish case scenario. Bullish case scenarios, we just keep trending up over this previous high. Neutral case scenario, right? Neutral case scenarios, you settle back inside the range, right? You got this big range here. You settle back in the range. That would give us a decent pullback with some shorts. And it would probably take us down into the 50-day moving average, right? So you got your breakout here. If you started to pull back and kind of get inside this range a little bit, it's not the end of the world. It's actually probably pretty damn healthy. And bearish case scenarios, if you broke below, I would say the 50-day moving average in this breakout spot, well, all of a sudden, that's more of a holy shit, we got to rethink everything kind of zone. And then you're going to change the way you trade. Does that make sense? Good. Now, beyond this, all right, so these are your indexes. Bullish, bearish, neutral case scenario. So let's run some damn scans, right? So first scan I want to run every single day is a liquid gainer scan. Liquid gainer scan is essentially stocks that have momentum, that have volume, and have a certain amount of ATR, so on and so forth. So I want to look and see like this. I'm primarily a day trader. Now we'll put stocks on my list for swing trade, but I'm primarily a day trader. So when I run a liquid gainer scan, I'm always looking to see, can I trade this stock the next day? And also, is this something I want to put on my list for later in case it could be a swing trade, right? You have to do two aspects of this. One of the things is you can't be too dogmatic either. In a hot market, it pays to hold overnight. When the market gets super, super hot, it pays to hold overnight. And so the swing trades, we get a lot of gap ups, right? We're not necessarily there yet where you get a lot of gap ups, But we've seen a lot of markets where the market gaps of like 0.8%, 0.7%, like 1% every damn day for like periods of time. So you in those markets, if we start seeing that, it pays to hold overnight because a lot of the major movement is happening what? In the pre-market or overnight. So let's run through this liquid gainer scan. This is primarily, I would say, a day trading scan. And what we're looking for is okay, we've got potential names that could be day traded. What can we do with them? Right? What can we do with them? So something like this Mongo Bongo. This is not like a hot setup. It's a this stock moves a lot, so it moved 30%. It's got good range. Like I would say 6% ATR. Your ATR is 23%, but a lot of this is coming on the gap, right? So whatever the ATR is before that is going to be a lot more compressed, let's say. But this is like your prime time. You have an earnings gap up, right? If you get a weak open on this and the market actually holds, see the volume pop on this bad boy. If you get a weak open on this and the market actually holds, well, guess what? This is a prime time candidate for a red to green. Add it to the list. I love earnings breakouts. This is the market for trading earnings breakouts. If you're sitting there trading high beta names, tech names, you will make money because everything just works out in this market. But if you're making like big D gains, it's usually going to come from earnings breakouts, not just that day, but the subsequent days. So Mongo Bongo, earnings breakouts up 30%. That's a lot of range for this type of stock. It's a $20 billion company. You're not going to really get much. But the next day, it's going to move a lot cleaner. We want to put that on the list. IoT. This is the quintessential earnings breakout, right? You have 21 million shares of volume. We came out of a big range. If you were trading this as a day trader, swing trader, whatever, shame upon you, shame upon your family. If you were in the business of hot heat, when you have an earnings breakout, an earnings beat, and you're breaking out over range, you got very easy setups. You can see here, like, right? You got ORB. ORB is minimum 3 candles sideways. At the open, you need 5-minute candles. Don't do 1-minute candles because 1-minute candles suck to trade. So you get step 1, step 2, right? And this is going to have many subsequent days probably on it. This is a high probability setup if you're a day trader. If you're a swing trader, you want to watch to see if this flags out or pulls back. But if this has a weak open, I mean, this is going to get bought up, right? You got a weak open on this. It's in the right sector, right? You're in the tech business. You're clearing ranges. You have a weak open on this. You go red to green. Hot damn, man. That's hotter than goose and caboose. And a goose and caboose, you're living, right? That's good God-fearing Christian values right there. So we want to come in there. You go weak open, red to green, your money in the bank. iHeart Media. Man, I never heard of these things. Wait, are these the guys that were doing the podcast for the Atlas guys? That's nice, right? They deserve to get punished. Hey, let me advertise a bunch of podcasts, a bunch of 19-year-olds with braces and pimples. Right? Like, I'm sure they know a lot about trading. So you got something like this. This is good God-fearing Christian fun, right? This is probably beating down Nate, but doesn't have enough liquidity for us. It's got 2.6 million shares. 2.6 million shares is fine if you're trading less than 1,000. If you're trading 1,000 shares, 2,000 shares. The size I personally need to get, like I can't trade this because, man, I'd be running through hoops trying to put so much money in this thing, right? And I just wouldn't be able to do it. So I can't get the size I want in it. That's no good. It's not a God-fearing Christian setup. Does that make sense? Liquidity is very important. Good. Johnny, what up, baby? Hey, Johnny Canuck. Johnny Canuck. Yeah, man. I thought Canuck was a little bit derogatory term for you Canadians. All right, I'm into this. Three taps means like three tests of resistance. So if you think of any breakout, a beautiful breakout, man, I sound super Trump right now. You have a breakout, test, 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 right? So the more times you test, the more powerful the breakout is. But the big hairy Indian butt is that you need minimum 3. If you do 2, the pattern's going to fail. Comprendes? Good. Let's keep going. Big lots. So this is a big downtrend here. The first update. I had a little bit of news out from an insider buy. And I don't know if this is anything. Now, big lots is awesome. First of all, Indian people. We got, half of my students are probably Indians. Indians cannot survive without big lots. We come to this country, what's the first store you go to? Fucking big lots, right? You can buy birthday presents there. You can buy home goods there. You can buy clothes there. If you're an Indian person, you go to big lots. It's about survival. It's about awesomeness. Big lots is a good place. It does not deserve to go out of business, but it's looking like it is, and we're more in the business of it's looking like it is. We gotta leave it alone. But I love big lots. My dad loves. Probably my first 10 birthday presents all from big lots. So now we got this CC. This is nice. So look at this. It does 2 million shares a day, 1.7 million shares. You have 6 million share thrust. Stock moves pretty clean at the open. It farts around the rest of the day. That's fine. The ATR was used up. This is a high time candidate for like a secondary move. We add this. And you know what? With the rotation in the markets, right? So we have a rotation in the market. Everybody's always thinking about right? NVIDIA, AMD, so on and so forth. There's a rotation in the market on Friday. Some of these lesser known names, if we are judging it by what happened on Friday, some of these lesser known names from different sectors are going to come into play. So like something like this, we got to flag this bad boy. We need a piece of that. Kodiak Sciences, this is a pump and dump stock. Not enough liquidity. Let's see, 1.4 million shares. You can't get any size in that. DGLY, is it right? Like they do the body cameras. Come on, 2.5 million shares for small cap. Not going to work. UCAR. Let me give you a little word to the wise. All right. Small cap stocks are designed so that one day you make a bunch of money, but you're never going to hold. Say you buy it here, right? You're never going to hold it to there. You're not getting this double. You probably sell here, sell here, sell here. All right. Maybe you take this pattern here, you sell here, sell here, sell here. You make a couple bucks. Feel pretty good about yourself, right? But then what happens is you'll end up giving it all back on a knife in a hot second. So you may nail. There's very few traders that see the hot setup and they hold it for the whole way, where they make such elongated gains that when these things turn over and they have to take a loss somewhere, some type of knife, they're actually okay because they made so much money. It very rarely happens like that. Most traders, all traders, you have this hot setup. You know this thing could double. You're still selling it. It's at $5. You're selling something at $5.10, $5.20, $5.30, $5.50, whatever. You're not getting that 5 to 15 gain anyways. So then when it knifes, though, you're not selling it for 10-cent losses ever. So you end up always net negative because these things are turds. They are meant for chat rooms. And unless you are running the chat room, unless you are the lead guy in the chat room and you already loaded before, maybe you have a fucking red beard and you do flowers and shit and get no women, then you are fine trading this stuff. But if you want to be a professional gosh damn trader, right? You want to do some God-fearing Christian trades, then this is not really, it's only going to lose you money. It may make you money once. It may make you money twice. But it might make you money that third time. And you'll lose so much damn money. And remember, unless you run the room and you are the first, you ain't gonna make any money. You never want to be the last man to the gangbang unless the chicks are super hot, right? I know in today's day with the he, she's, and we's and stuff like that, these things are not as fun as they used to be. But it can be fun. If you're first, if you're second, maybe. But you don't want to be fourth. You gosh darn don't want to be sixth or seventh. And that's what happens in stock. That's what happens in small cap trading. You're better off like shorting these things and all these kind of things, but that's a harder game than even longing them. So leave it alone. It's okay. Now you got something here. This stock is a pig. It's probably a fraud. Man, it's such a pig. It's such a fraud. But look at this shit. This is how many stocks are actually 52-week highs right now? How many stocks are 52-week highs right now? With this kind of range, the ATR percentage on this is 10%. That's very good. I would consider anything over 5% ATR pretty good. That's a non-small cap stock. That's pretty good. This is a quintessential, hey, everybody hates it. It's a turd. I know it's a turd. It's probably a zero. But the big hairy Indian butt is, look, this thing used to be $95. The float on this is 55 million. The ATR percentage is 10%. You get a week open on this. What I mean by week open, for those of you guys new, means okay, close at 21.25. It dips down a little bit at the open. It goes red to green, means it breaks over the previous day's close. You got some fun right there, man. That I would say that's a beast right there. Shitty company, big beast. Shitty company, big beast. Dish Networks. Fuck these guys. This is actually a really good setup. But they charge so much money for that NFL ticket and all this stuff. I hate them. So I can't support this. This is a nice setup, but you all bought an NFL ticket before. And it ain't good. It ain't good. So we ain't doing it. We ain't doing it because we are good Americans. And at some point, we got to put our foot down, right? We're not going to let China. We're not going to let China. And we're not going to let Dish Network overcharge us on the NFL ticket. No more. All I want to watch is one game on the Detroit Lions. I don't need all the rest of this shit. And that's what they're doing. They've been fucking us over. We're not going to trade this. I would short this, even though it looks like a good setup because you have big volume pop and, so on and so forth. But fuck that. We have morals here. Not many, but we got some. And that's all you need. Guys, look. Everybody's trying to shame you on what you should be, what you should not be. Just get 2 morals, right? You get 2 morals, you're living life. See this thing, pi? P3? That's a nice, good God-fearing Christian setup. But not enough liquidity for us. These people are probably doing good work right here. If you're trading a couple hundred shares of stuff, this is fine. They ain't going to work for us. Now, whoa! What is this? This I like. Really, I like this a lot. I like this motherfucker a lot. So what do you got here? You got bottoming pattern, right? You got a little volume accumulation station. You got ranges that are starting to build. Right? Yeah, we got to put this on the list. And then you have to also think about like this. There's a dash for stocks that are on a bottom. People don't even give a shit right now what they are. Hey, you're a big gelatinous, smelly turd, and you got $3 stock. Hedge funds are buying it. Retail traders are buying it. Discord is buying it. Whatever, right? People are buying this shit. You got 28 million shares on Friday. It's liquid. It's juicy. You can even trade options on it. This thing has got the set a week open on this, red to green, we shred it. God damn right. RMTI. So this is a nice setup, but it's too extended. We get 1, 2, 3, 4, 5, 6 days in a row. So let's get a brand new. Stock is up 6 days in a row, 5 days in a row. That ain't gonna work. Day ones, day twos, and a superior hot market, day threes, you can come in. But if you're coming in day fours, day fives, you're always late to the party. Comprendes. Groupon, not enough range. Lululemon had earnings on that just sat around, right? But this is something to watch, I think, on a longer term basis. It may need to pull back or whatever. It's going to fill the gap because this is a nasty little reversal candle. So if the gap's up tomorrow, it's probably going to fade off. But this is one of those ones. I would set an alert because once again, like in this market, people are pushing stocks and they're digging in for value, right? So you have a breakout here at 35. Like this probably needs to fade off more. If it pops up here, it probably fades off more. But I would put an alert. Like I would go like say 380. Just do 380. Right click it. Hit a little bit of price alert. Hot damn, right? Fucking night. So you got a little price alert right here. If it starts getting there, then you know it's going to come in. Because one day it's going to break this level and it's going to be hot. But the thing is, if it breaks this level tomorrow, you're going to use up all the ATR. The ATR is $13, right? So if you broke the level tomorrow, you would use up ATR plus 5 or plus 7. Like it's not going to hold, right? That's how you get failed breakouts. Always remember this. When you get failed breakouts versus actual breakouts that confirm. Breakouts that confirm, the range is going to be so tight. You're going to have the 90 make curls for the girls coming up on the kitchen. But the big thing is you're not going to have used the ATR. If you run in hot into the spot, no, man, that ain't going to work, right? The 9 don't shine midday. The 9 don't shine midday. We got to leave that alone. Pig. Ooh, this was a buyout stock. This is a nice setup, but this is a buyout stock. Oh, man. Let me tell you something, man. I was hunting out there in fucking Texas one day, man. I had not that much money, man. Like I was running low, but man, I'd get some deer food and some pellets and shit. Man, I got these pellets, man. And I was looking for like just a little bit of fertilizer. And this guy was charging me money, so I had to go to the bank, man. And I came into this wall, man, the Western Alliance Bank, and I'm like sitting there like, man, I'm in Texas, man. This ain't no West. But they charged me like $9 for the ATM. And all of a sudden, I became a believer in that stock. And I'm a believer right now. We're looking for names that have shown levels that are beaten down. Right? So we're looking for downtown beaten down. Ooh. Somebody write that down. That's downtown beaten down. Oh, man. We got a spot right there. So we're testing. I'd say like, look, it's not exact level. That's why it's always called zones of love, right? Zones of love. This is not a level, but we got a zone of love here. Yeah, I would say 39 to 40, right? Let's just call it a little bit of zone of love. So you got a little bit of zone of love. Whew. We start cooking over that thing, man, we're cooking and booking, man. We're turducking. We're not just cooking and booking, making goddamn venison, man. We're doing turducking over here. We're doing turduckings. Add this to the list, man. This Impact W, I hate banks, and we should short these things to zero. But in the meantime, we got to do what we got to do. All right, this look, this one of those. This probably has a squeeze in it right here. Whatever, but it only does million shares of volume. That ain't for us. We can always act as if I don't care if you're trying 100 shares or a million shares, right? We need to trade some liquid names because at some point, if you're really serious about your career, you're gonna trade. You're gonna need the liquidity. So you might as well start now. Aver, right? This thing of if you like small cap stocks, this is actually a bread and butter swing setup for me, which is like breakout, pull back to 20, remount to 9, but and then we got hotter. What you got with this, man? Knife forever. Knife forever. Man, I'm all about that knife forever. Nah. Comms. Yo, so this is also bottoming stock. You got probably enough liquidity. This stock gets picked up. This is more like when I see these kind of names, like I think more like IRA type of play because I don't know if they have the intraday range like you see here. So this yellow is intraday range per 5-minute candles, 2 cents. I'm a god darn, like I'm impatient. If my stock is moving 2 cents per every 5 minutes, I only got so many damn minutes, right? I got like 50 minutes some days, like whatever, 200 minutes. If it's moving 2 cents a minute, 2 cents per candle, right? 5-minute candles. That's not gonna work for us. That ain't gonna work for us, right? So it's a good setup. To me, this looks like an IRA play. We leave it alone. Looking at, gosh damn right. Bang, bang. Pattern. Ooh, none of liquidity. Vimeo. Yo, this is the type of setup that will work, but this is an IRA play. First of all, shitty TVs, but good for them, man. The fact they sell so many TVs and they be so shitty, man. All of Best Buy, right? You got Vimeo displays. They got a good racket going. So this thing is $70, $61. Man, you got a 4-spot. You got a 4-spot. Break out of that 200-day moving average. A little bit of volume thrust. Nice little intraday trender. This is not a day trader. It's not a day trader. You can't necessarily day trade this unless you're doing like 30,000 shares, but it doesn't have the liquidity for it, right? But this to me looks like a little IRA type of play, right? Like for me, this looks like a little swing trade, right? Like you get a week open, you toss down, say 5,000 shares in your IRA or something like that. Minimal risk, like put a stop below the previous day's candle, 385. That's going to get Vimeo is considered a tech company. It should get picked up. Everything's getting picked up because you have IWM if it starts to follow through, if you actually get a little sector rotation, whatever. Fucking hey, man. Fucking hey, man. That ain't bad. That ain't bad. This is not, to me, that's a little swing trade setup, not a day trader. Now, always remember, like, I have to look at day trades from a liquidity portion, right? Like this is if I had 2,000 shares to move 50 cents, like it'd be nice, but I'd need to get a lot more size than that, so to move the needle. So it's not really for me, but that's a good swing trade setup because you have 2,000 shares, maybe it goes to 7, 8, 9, 10, right? All of a sudden you got some OPP. I can explain it. Office Properties Trust. Yo, that's clean. That's a base breakout. Once again, not enough ATR, 42 cents a day trade. But that shit's hotter than Goose's caboose right there, man. Tight. Right? That thing is tight, man. Woo, that's good. I'd add that, but that's probably more of that's a little more swing trade. Wait. Look, the market was especially hot on a Friday, so you're getting a lot more of these. I would say on any given day, like you probably get 100 names on the liquid gainer scan. I mean, today there were 683 names, so you're not going to go through them all. I would go through all of them up until about 4%, 3% if they're liquid. Peloton. This actually fits the profile. Everybody should add this to the list. Not for tomorrow, like it's already too extended. You have 3 days. But if you have, like, say, an inside day, right? If you have an inside day, you have 2 inside days. That sets this thing up for something very, very juicy. Like that's a juicy. It's not ready to go tomorrow. It's not DTF, but inside day, maybe 2 inside days, you're good to go. See, this thing used to be $150. Coming out of base breakout, that's another one, but does have the liquidity we need, right? Only a couple million shares. That's nice. Real nice. That's nice. And it's natural when the market sucks, like you don't have really many setups. And then now, right when the market's heating up, because the IWM was up 3% on Friday, you're gonna get like a lot of stocks like start showing the range. So you got to be a little bit selective. That's why, like a lot of these, like, man, a month ago, I would have said like this is top of the list because there were nothing to trade. But now we have so many things to trade. This just doesn't have the liquidity we need. It's only about 1 million shares a day. Look at that shit. That's nice. This is another one. If you got smaller accounts, you don't mind a little bit of lack of liquidity. Like if this thing gets over this level, like you're filling this range here. It's not enough to day trade, I don't think. If you're trying to trade, like say 2,000-3,000 shares, if you're doing, I would say 500 shares, 800 shares, whatever. That's a hot setup, just not for us. Hey, Susanna, it's good seeing you, baby. You never brought your friend around. The guilt. A firm, I would say this is probably top of the list too. Tech stock. The beaten down names, the ones that are well known, are the best because they have like a little cult following. 50 million shares, you got liquidity. Finally broke over the 200-day moving average. Let's look at this on a 30-minute chart. Oh man, oh man. Goddamn right, man. Look at this shit. Look at this, man. That's 2 burgers in a bucket. Fuck it, right? Set an alert here. If it gets over 1570, shit, man, shit. That's nice, man. I'll say me and Jebediah, man, we're about having a lot of fun on that stuff. Man. Affirm, if it red to green, if it dips weak, we're going in. See this? This is nice. This is probably more of a swing trade setup. Why do I say it's a swing trade setup? The ATR is 40 cents. It's not much for us a day trade. But this is like it's a bank. Banks are rounding. If it gets over this is a 30-minute chart, 810. You could probably put a stop. I would say I'd go with literally the bottom of this day. So 50-cent stop. And then you let this thing ride and see what happens. You probably sell some here, here, so on and so forth. That's a good setup. That's called the base breakout. Base breakout is when a stock is 50% or more off its highs. You build a big base, and then all of a sudden, right, you get a rounding situation, and the EMA start to curl up. Man, that's a good setup. What do you think? Not a good day trader because it doesn't have the ATR. But big hairy Indian butt is. That thing's got potential. Does that make sense? Comprendes, comprendes. That's Spanish for do you understand? Everybody get? Fucking night, man. Let's do this. Good. Look at all these stocks. So there's a million of these kind of names. See this thing? This AHR was the hottest stock around in the bear market. And then it had some bad earnings, but came down 200-day moving average. Just got bought the F up. Now it's up way too much, right? Like you can't really do anything with this. This is a double top for the most part. But the heat is heat, right? Heat is heat. So this is like something probably like, see this 2-tapper? So you need to pull it back and then, right? do a little show and go for the third. So it may take a week or two, but that's a good setup. And there's a lot of these bad boys. Now let's take a look on the downside here. And like we gotta need some shorts because we can't just look and think, hey, everything is alone. But there is one thing we should do. These software stocks that have gapped down, it could be on day one. This thing was on 35%. They've actually been reversing like a lot. Like crowd. Like it was at 162, gapped down, and then reverse. It's about to break out, right? So no. And gap down the huge that day because this is the market. In a shitty market, when you get the gap down, you're shorting it to basically zero. You know, when you get these, not zero, but right? You're like shorting it for months sometimes. But like what's happening is they're getting bought up. So I'm wondering about this S because it is in the software business. All the other software stocks have been rebounding, right? Like if you look at even like Okta, hit the 200-day moving average, right? Ended up popping up. I'm wondering if I'm going to watch this one. The SSR should be on this because it was down 35%. So like if this thing starts to like round, let's say we take out this zone here. There's two zones. You got one zone here, right? That's your VWAP area. That triggers into 14. If it gets over 14, normally I'd be shorting these, by the way, but that hasn't been the play of recent. So I'm curious. There might be some RR here if we get I'd set some alerts at 13, 15, and 14. Top, that's a pump and dump. Stay away from all these. They're too illiquid. Now, IONQ is interesting because it was a high flyer. It was just, man, I was really ready for this thing. I tried to long this thing a couple times for a day trades right here. And I got stopped out and, vice versa. That'll happen sometimes. So now all of a sudden this thing's pulled back. I'll have to check. I didn't see any news on it, but there might be. Anybody see any news on this bad boy? Usually they don't drop that hard out of the blue, but what are you going to do? What you going to do hoo-hoo for a Klondike bar? Goddamn right. All right. Anybody see any news on this? Yeah. We'll come back to this. AI. So this has actually held up pretty well, right? So you had the big ramp at earnings as it pulled back, but a lot of the pullback was just due to the ramp. It's actually been hanging out pretty well. Now, there's no cleanly definable ways. Like, is this a long? Is it a short? Is it a head and shoulders? Like, we don't really know. But this is something to be familiar with just because, like, keep an eye on it. Like, if it starts to just hold this 31, let's just say 30, let's call this 31 zone, right? A zone of love at 31. But it starts to test it and hold it. See, it starts to grind on this thing, right? See, it starts to just marinate, grind. You get the little grindage. You're holding at that 31 zone. Yeah, you're going to get a $5-6 bounce on it. Right now, we don't know that for sure. Like the earnings were shit, and it went a huge rampage before earnings. But we've seen this a lot. Like sometimes, like a stock can have the shittiest news, whatever, but the market is so hot, it'll start to grind for periods of time and then ramp up, right? I think this may be one of those cases. Let's watch this 30 to 31 zone. If it starts to hold, it's a shell and go. Oh, right, dude. Another test of the 13. Look, until this thing breaks here and holds, may need to hold for a day. It's not ready. Every time it tests it, 1, 2, 3, 4, 5, it just comes down. I wouldn't be surprised to see it bounce tomorrow, but we're just in a box on this, right? And when you're in a box, there's nothing worse than trading in a box. If you're in the middle of the box, 3/4 of the box, whatever it might be, there's no good spot on that, right? No good spot on those. Till that box breaks. You break the box unless you want to be stuck in the middle. Stuck in the middle is the worst. It's like sitting in the back seat of your buddy's Volkswagen Beetle while everybody's making out with chicks and you're just sitting there in the middle, the penis in between us. It's not right, right? We're meant for better than that. Happened to me one too many times. Not me, but people I know, right? Does that make sense? Good. Hey, GSIT. It had the breakout and it didn't hold. This will all be dependent on AI stocks. It's still holding on the 30-minute. It's still holding on the hourly. But this will need a little bit of, right, a little bit of love. But it's still something worth keeping an eye on. Roblox pattern has been destroyed. Fuck that thing. Right? Rambus, so on and so forth. So a couple things we should look at, like while we're looking at these indexes, though, right? At some point, say we gap up tomorrow. That's going to take us outside the upper Bollinger Band. We're already at 85 The market is super healthy, but it could use a couple days of pullback, maybe even a week or two pullback, maybe in a month of a consolidation or pullback. It's coming. Whether we want it or not, we have to think about this. The market is up 30% this year. You may not feel it because people aren't talking about it, but it is true. At some point, and we don't have any evidence of it showing yet, but we have to be careful getting too big of size when the market is so extended and it's up so much. And every indicator is showing us like so much bullishness. That's usually when the rugs come. Now, when I say the rugs come, is it going to like crash the market or nothing like anything like that? No. I don't think we're in, that's a bear market scenario, but like we could get a test back into a breakout spot, right? Test back in 50-day moving average. Like these are things that can happen. So last week, there was a lot of stuff flying around. That was your week to make money. Now we're getting into a different period in the markets where we have to be, I think, a slightly more defensive, at least on the tech names. Now on the SPY names, right, like you're just coming out of range. So maybe there'll be a little bit of rotation. It doesn't feel like it. Feels like people only want these big cap techs, but there could be a little bit of rotation. And you saw it outperforming the SPY, right? There could be this is looking so good, like you're breaking a big range, getting on a 200-day moving average. So what it's looking like and what we have to think about is it may be a scenario. Look, these stocks were tanking and big cap tech was going, right? There could be a scenario where big cap tech pulls back hard and some of these names go. So what you want to be really doing is keeping an eye on this IWM. And look, IWM stocks all suck to trade for the most part. It's better to, if I see this IWM going, I'll just do what Levi does. Levi's the guy that does options in our website. He's so fucking good, but I'll start trading I'll just start trading the indexes. Like this thing pulls, if this thing has a week open, right, and it holds here, man, that's a nice opportunity for some calls, right? A little bit of calls and do something like that. You may see a little bit of rotation here, and we got to be a little bit careful of that. Good. Let's go back into some of this stuff here. One thing I would recommend too, see this NNOX is still really good. Week open on that. The banks too. Peloton, Affirm. There are still tons of names out here. Tesla is too extended, right? Like this, the bounce here is at 180, is at 220. If the market rolls over, that's my top to short. See, like this Iowa had news out this particular day. Like I sent an alert here. These are like just names from my individual watch list. 930, 920. Like we want these kind of bottoming paths. See this W? This thing is be like $450. Like these are names we want to watch. Ooh. Yeah, I'll post the watch list instead. Yeah, and I do other scans. Like one of the things I'll do is I get my parents down here, so I got to run in a little bit. I do a 90-day, 30-day, 5-day sort. I go about 90 days. I see what are the top momentum stocks of the last 90 days because these are the names you want to be concentrating on. Like if the market rolls over, this is a name that's going to roll over. You still have room to about 206 to the 90 May. Then you got this gap fill here. Like if the market rolls, which we don't know if it's going to, right? But we have to always be careful. Whenever you think the market looks great, that's usually when the rug comes. These are names you want to make real familiar with yourself. By the way, add this to your list. If the market gets hot, this had this big 13 to 16 range. We were all up on this breakout, big time. Now you got an inside day, right? Inside day after a big run is like a money maker. I mean, that's like a cheat code in a hot market. The best scan you can run in a hot market is an inside day scan. Hold on here 1 second. Let me run. I got a couple different types of inside day scans, but see, this is like inside day scan, but it already ran up too much. This GLBE, shit. That's the type of name, right? So you have the thrust, 2 inside days. You go to this breaks this 36. I mean, that's ready to flip. See this? Multiple inside days, multiple inside days. Netflix, big thrust, inside day. Watch this name at like, I would say 408, give or take. Add an alert there if it gets there. I usually just do the options on this when it goes, but ideally could use some rest. Carnival Cruise Line, Zillow. Man, that's a nice. See that? Hey, man, it's an inside day here. This is a bullish pattern. Bullish. Inside day. Woo! Yeah, I'll send it to you guys. Hold on. See this AR? That's nice, but that's too slow. The ATR is only 2%, right? Oh, there you go. It's right there. That's a money maker. Inside day is important because when you get a hot market, what's often happening, Sean, is you get a thrust and you're not going to get a secondary thrust because the thrust is so big. So then you get an inside day, which is just a rest day. Stocks are like people, they need to rest. You run a race, you need to rest. The consolidation, the resting gives you power. So when you have this huge run and then you rest for a day, it allows it to breathe, to build steam. It allows it to build power. And then all of a sudden, right? And that's I think the inside day setup is one of the best setups in the market currently. PDD is okay. I've had no luck trading these Chinese stocks. So it's a little bit too sloppy for me. Like I like when they like pop up and then they have inside day, inside day. This was like came all the way back, but it may be one of those dash for trash kind of things. I know, D-Mac. My teaser has been acting very wonky too, brother. Anytime, Sean. All right, folks, I got to go. Anybody got any questions? Anybody got anything you want me to look at? Go once. Going twice. Sold. Adios, muchachos. I got to go do what I got to do, which is what men do. Which is, we go hang out with my mom and dad. I love you.